Welcome back to Brisbane Property Uncovered, where we break down the real world strategies behind property ownership, investing, and wealth creation. In our last episode, we talked about how refinancing can either save you or cost you tens of thousands, depending on how you structure your loan. Today, we're talking about something that gets investors really excited: how to buy your next property using equity, not cash. That's right, no savings, no cash injection, just using the value you've already built in your current home or investment property. Let's start with what equity actually is. Equity is simply the difference between what your property is worth and what you owe to the bank. So, if your home is worth, let's say, 800,000 and you owe 400,000, that means you have 400,000 in equity. Now, banks typically allow you to borrow up to 80% of your property's value without paying lenders' mortgage insurance. That means, in this example, you could potentially access 240,000 in usable equity. And here's the exciting part. That could be enough for the deposit and costs to buy another property without using any of your own cash. But how you structure that new loan makes all the difference. There are two main ways to do it: cross-collateralization and equity release. Let's start with cross-collateralization. This is when the bank uses both properties as security for the one combined loan. Sounds simple, but it can cause problems down the track. For example, if you decide to sell one property, the bank can decide how much of the loan you have to pay back before they'll release the title. That can limit your flexibility and make refinancing or restructuring harder later on. On the other hand, an equity release means you create a separate loan against your current home, drawn out of the equity you need, and use it for the deposit and costs on your new purchase. The new property stands on its own loan, separate, clean, and easy to manage. The benefit: you keep control. If you ever sell, refinance, or restructure, you can do so without affecting your other properties. And importantly, you've been able to buy an investment property without using cash. It's one of the smartest strategies to grow a portfolio safely and strategically. So whether you're thinking about tapping into your home's equity or already own an investment or two, make sure your loans are structured to give you freedom, not friction. And if you want to find out how much usable equity you might already have, get in touch with me at MoneyQuest Manly. We can crunch the numbers and help you plan your next move. Thanks for tuning in to Brisbane Property Uncovered. Don't forget to follow the show for more practical insights on how to build wealth through property. And we'll chat again soon. Thanks. Bye.